Hello and welcome to the Business Standard Morning Show. I'm Ishan Gera and here are the stories for the day. For the first time, India looks set to allow foreign universities and prominent institutions to open brick and mortar campuses here. It means that Indian students will get degrees from the US and European colleges without leaving the country. How will this move shake up Indian higher education space? And is India ready to welcome foreign universities? Tariq Ahmed and Devargya Sanyal have the answer.
After decades of reluctance, it seems India is finally opening its doors to foreign universities. The University Grants Commission has come out with a draft legislation which, once turned into a law, will pave the way for foreign universities to set up branches in India to offer offline courses. The draft, which is currently open for public feedback and review, allows a foreign university among the top 500 global rankings or a foreign educational institution of repute to apply to the UGC to set up a campus in India. Such a campus can evolve their own admission process and criteria to admit domestic and foreign students. It will also have autonomy to decide its fee structure and will face no caps that are imposed on Indian institutions. The fee should be reasonable and transparent, UGC has said. It will also have autonomy to recruit faculty and staff from India and abroad. They will also be allowed cross-border movement of funds. However, such universities and colleges cannot offer any such program of study which jeopardizes the national interest of India or the standards of higher education in India. There have been several moves toward bringing foreign universities in the past. In 2010, the UPA II government brought the Foreign Educational Institutions Bill, which was not passed as the BJP, the Samajwadi Party, and left parties opposed it for multiple reasons, including concerns about the Western influence on Indian ethos. The National Education Policy, or NEP, also mentions that the top 100 universities in the world will be facilitated to operate in India through a legislative framework. However, while the NEP talks about creating a legislative framework, the government is following the regulatory route. The NEP also proposes attracting the top 100 universities, while the UGC draft permits universities with top 500 global rankings. One of the objectives of promoting India as a global education destination is aimed at saving the loss of foreign exchange. According to RBI, nearly 13 lakh students were studying abroad in 2022. And the country lost 5 billion rupees in foreign exchange due to students going abroad in FY 2021-22. And last year, nearly 4.5 lakh Indian students joined foreign universities. Raj Singh, Vice Chancellor of Jain University, believes that UGC move will not only help stymie the outflow of Indian students but also bring in foreign students who cannot afford education in the US or the UK.
To my mind, entry of the foreign universities in India through setting up campuses independently or joint ventures will provide a third option, which is somewhere in between the two extremes. It's not going to be as low as Indian university fees. It's not going to be as high as the original fees in the parent campuses of these universities. And therefore, those students who wanted to study abroad but could not have the resources will find it very useful. And some of the foreign students who are finding it prohibitive expenses to go to US and study or go to UK, all those countries who are trying to attract, will find it more useful, more affordable to come and study in India in those campuses. So I think this will see a net inflow of foreign students in the country and therefore a flow of foreign currency, which somehow has been seeing a trend of outward movement thanks to the inflation as well as the value of rupee going down in the last few years.
But the entry of foreign universities may exacerbate India's perennial faculty shortage problem. Central universities have been grappling with this issue since the 1980s. In a reply to the Parliament in July last year, the government had said that there were a total of 6,549 vacant faculty positions across 45 central universities. Delhi University topped the list with 900 vacancies, with Allahabad University coming in second with 622 vacant positions. So the entry of deeper-pocketed FHEIs do pose a problem. They may attract the best and the brightest faculty from domestic institutions with offers of higher remuneration.
Good faculty from public funded institutions is going to be in huge demand. They are going to get leadership positions in new institutions, which they will probably not get in the present setup. So there's going to be again a churn there, and our students are going to be at the losing end in that sense, because there's going to be another kind of vacuum in public funded universities for faculty. The already poor situation is going to become even worse.
UAE, Qatar, and Malaysia are the pioneers of hosting top international universities, and the model has helped these countries save the outflow of capital and become knowledge economies. These countries have grown as education hubs with large international student participation. It also helps more students from their home country to get an international exposure. But like UAE and Qatar, it is important for India to make sure that local students from different backgrounds get admission through more need-based scholarships. The future of education cannot escape globalization. Allowing foreign universities to set up campuses in India will definitely bring in a competitive edge to the higher education sector. However, a move in this direction will also require simultaneous bolstering of India's higher education institution infrastructure, like filling up of vacancies.
Some teachers' associations too have voiced concerns over UGC's move. They fear that it will turn education institutions into commercial spaces. Now it is up to the government to address all these concerns before it comes out with a final set of regulations. Meanwhile, there is another pressing issue which needs the government's attention: the inadvertent import of plastic waste in India. A recent Bloomberg report revealed that UP's Muzaffarnagar has become the dumping ground for plastic waste emanating in the US and several other Western countries. Despite regulations against waste imports, how is India still on the receiving end of the world's waste? Debargya Sanyal explores.
A recent Bloomberg report brought to the fore a reality which was otherwise hidden from the public purview. It revealed that India is inadvertently importing waste from the United States and a few other countries. Just 160 kilometers from Delhi, in the sleepy town of Muzaffarnagar, rag pickers, mostly children, can be spotted scavenging big garbage mounds for plastic waste, which can be tracked back to 12,000 kilometers away in the United States and Europe. Paper factories in India often rely on imported waste paper, which is cheaper than wood pulp. The nation's paper makers need to import around 6 million tons annually to meet demand, and most of it comes from North America. But the bales of paper are frequently contaminated with all kinds of plastic that consumers have tossed into their recycling bins, including the flimsy wrapping that holds water bottles together in a pack, soft food packaging, and shipping envelopes. The world produces 2.01 billion tons of municipal solid waste annually, according to the World Bank data. Waste generation is supposed to increase to 3.40 billion tons by 2050. Out of this, 33% is managed poorly and in environmentally unsafe manner. And out of this, high-income countries, accounting for just about 16% of the world's population, generate 34% of the world's waste, that is 683 million tons. Countries like China, India, Sri Lanka, Philippines, Malaysia, and Indonesia have traditionally been the dumping grounds of such waste. According to a report by the Council for Foreign Relations, or CFR, over 25 countries dumped 121,000 metric tons of plastic waste in India, illegally imported by private companies. In 2018, Beijing said it will only import 99.5% pure and uncontaminated waste, an impossible standard, according to the CFR report. Countries like Malaysia, the Philippines, Thailand, and Vietnam all sent back containers after containers filled with tons of garbage back to the exporter. India used to be the second largest importer of US scrap plastic, but has since 2019 banned almost all imports of plastic waste. And yet, demand for paper has created an unaccountably large loophole in the ban on plastic waste from overseas. India may be bringing in as much as 5 lakh tons of plastic waste hidden within paper shipments annually, according to a government environmental body that estimated the level of contamination at 5%, the Bloomberg report said.
When you are allowed to import any waste for recycling, some amount of contamination is permitted. And but what happens is that contamination should also be essentially non-hazardous in nature. But in certain cases, many exporters, what they're clandestinely doing is mixing paper waste with other kind of undesired waste which are banned in receiving countries, like plastic waste and electronic waste chips, which are otherwise not allowed to be imported in these countries, including India.
Paper may not be the only route for foreign wastage to seep into India. Pandey elaborates that used goods might also be a major factor.
It was kind of initiated with a noble cause, stating that the goods which are not used by first generation users in many countries and discarded, and also with goods with, say, minor defect which can be easily repaired, was sometimes accepted by receiving countries on a charitable basis, not on a commercial basis, but on a charitable basis, to be used by primarily by, say, education institutions or deprived section of societies, which many countries, they started sending waste which couldn't be used in the second generation or third generation, even after repair. And the waste started coming in disguise of second-hand goods.
Prerit Damani, founding partner, Greens World Renewable Resources India LLP, points out that it is nearly impossible to prevent plastic flakes from making their way into the paper imports. However, while plastic flakes can still be recycled or processed, he points to more dangerous kinds of waste imports.
And really speaking, these plastic flakes are very difficult to kind of segregate along with the newspaper or the paper. The paper and the raw material or the bulk paper, or it is impossible to control or check each and every container containing any article, any paper. But still, plastic with the right technology can be handled. But handling e-waste or biohazardous waste or radioactive waste is absolutely a strain on the entire environment.
What then can be possible solutions? Pandey believes that a proposal to use special economic zones for recycling and regulating foreign waste should be reviewed and relooked.
Very important first step is basically sensitizing and capacity building of port officials. And they need to strictly adhere to regulation that if a material which is coming in is not compliant, then they need to strictly initiate the process of sending it back to exporting country. Plan was made that some of these materials will be handled and recycled in special economic zones, or and there will be industries, there will be recycling parks established in these special economic zones, and these will be allowed to import some of these materials where there's a clear value to be derived from recycling. but with the condition that any waste or residue which is getting generated in the recycling would go back to country which has exported that to these recycling parks. So that needs to be now looked at again and looked at how this can be implemented.
Damini also believes that besides a sturdier regulatory framework, India also needs greater infrastructural upkeep in processing waste.
As a country, we generate about 80 million tons of waste annually, and we can collect or process only 70% out of this. Collect only 70% out of this. We process hardly 25-30 million tons of waste in total. Balance everything goes to landfills, and then 5 years hence you come up with bioremediation plants where and I'm not in no way I'm criticizing this. It's a process which takes time, where the problem is that in you clean up certain waste and you put the balance in the landfill. This process needs to be hastened up. For example, when a concessionaire is given an agreement, signs up for an agreement, all his policies, all his implementation plans, all his financial capabilities needs to be cleared upfront. Despite the CPC guidelines, this is not exactly implemented correctly.
Stymieing the inflow of foreign waste will not be easy. Despite the regulations and checks in place, weeding out plastic and hazard waste from recyclable waste will require vigilance. Not just the receiving countries, but the concerned authorities in exporting countries too need to take up the responsibility of segregating waste more efficiently and judiciously. However, if the problem persists, India might have to follow the countries like Vietnam who have started sending foreign wastes back. The question of waste as a byproduct of second-hand goods will still remain and will therefore need regulatory intervention.
Moving on, a weakening dollar, rising yields, recessionary fears, and less hawkish stance by the US Federal Reserve have triggered gold near all-time highs. So far this year, the yellow metal has already surged 2% to 56,100 rupee levels, while domestic equity markets reflected negative returns during the same period. So will gold continue to glitter throughout the year and outshine other asset classes? Here's a report. After gold saw 14% climb in 2022, the bullion extended over 2% gain so far this year as moderation in US economic data strengthened hopes of a slowdown in rate hikes by the US Federal Reserve. On MCX, spot gold hovered around 56,100 rupees per 10 gram, inching towards August 2020 highs of 56,200. In the international markets, meanwhile, spot gold scaled to 8-month high of $1,874, supported by losses in the dollar index. Experts believe that investors flocked to the safe haven asset after the US dollar index declined 9% to 103.2 from October 2022 highs of 113.1. Moreover, analysts peg that the Chinese reopening of the economy would push the demand for the yellow metal and trigger up to 16% rally in 2023.
Gold and the US dollar have had an inverse correlation with each other. So whenever the dollar moves lower, gold generally tends to move higher. And this is what we have been seeing in the last couple of months. So the US dollar index topped out at around 114, 115 levels. And from that point onwards, gold has been seeing a steady up move. So we believe that the US dollar is likely to shift lower. Probably it could head even below the 100 mark in the next couple of months, and this would be a major positive news for the gold. And from a domestic angle, if we see, gold is already trading around its all-time highs. So significant up move could be seen from these levels if we break out of these previous highs of around 56-57,000. So there's a strong possibility that gold could see a sharp up move in rupee terms. On gold, we are expecting a target of around 65,000 and higher levels.
Analysts also believe that fund managers would continue to prefer gold over other asset classes as hedge against their portfolio until global uncertainties fade out.
Gold is likely to rise to record high level in 2023. It is up nearly 3.5% this year as it is being propelled higher on multitude of factors. There is an increased risk of global recession. As per IMF, global growth is likely to be 2.7% in 2023, the weakest growth since 2001 except for the global financial crisis and the COVID-19 pandemic periods. Latest US ISM manufacturing and ISM non-manufacturing data have dipped into contraction zone. Thus, odds of a US recession or stagflation have increased dramatically. In the US, full-time employment is down by 444,000 since May. The US Federal Reserve may turn less hawkish going forward. In this scenario, the US dollar is likely to struggle and yields may soften further. Other major supporting factors include expectations of China's pent-up demand as it reopens its economy, continued support from central bank buying, fund managers buying gold as insurance to their portfolios, fiasco in cryptocurrencies space, and geopolitical concerns due to Russia-Ukraine war and China-Taiwan tiff. Biggest risk to bullish outlook will come on a truce between Russia and Ukraine. The metal is expected to make new highs this year. Its all-time high is $2075 in the spot market. In the Indian rupee terms, it may rise to Rs 63,000 to Rs 65,000 this year.
Analysts at World Gold Council believe that the yellow metal would face a tough environment in 2023 if business confidence is restored and spending rebounds. As regards today, rupee movement, global cues and FII flows will steer market sentiments. Globally, investors will watch out crude inventory data later today. This year, the worldwide end-user spending on public cloud services is likely to cross $591.8 billion. As the world is increasingly turning digital, the dependence on the cloud for storing data is increasing. In our Decoded segment, we tell what cloud computing is all about.
The internet today is synonymous with the cloud. For you and I, it is about iCloud, Google Drive, and Microsoft OneDrive, which we generally use for storing data and sharing files. But for modern enterprises, it is a critical platform for delivering services over the internet, which ranges from networking, software, databases, to analytics. So cloud computing is the practice of using a network of remote servers hosted on the internet to store, manage and process data rather than a local server or a personal computer. For building an application that provides better customer experience, enterprises and developers use various cloud computing platforms where they can leverage these services. This saves the business from the cost of setting up expensive hardware and software. Also, cloud computing platforms charge the organization for the capacity utilized in real time. This makes the business agile by offering them the flexibility to expand or shrink according to the business needs. A case in point is streaming service Hotstar. It set a global record of 18.6 million viewership during the 2019 Indian Premier League final. Hotstar's parent company, Novi Digital, leveraged Amazon Web Services to reduce cost and time to market for its over-the-top or OTT content platform. According to company sources, Novi Digital uses the Amazon Cloud platform to provide cost-effective scalability for its OTT platform. Among the critical services offered under the cloud computing stack is Software as a Service or SaaS, alongside Infrastructure as a Service and Platform as a Service. SaaS allows an enterprise to deliver services and applications over the internet without the need to install and run applications on its computers or data centers. Platform as a Service allows enterprises to develop or run new applications over the internet without installing its own software and hardware. Cloud platforms also offer database as a service. It enables enterprise users to host databases without buying dedicated hardware. Amazon Web Service, Microsoft Azure, and Google Cloud platforms are some of the leading cloud computing platforms that companies turn to reduce risk, faster time to market, as well as drive innovations. Cloud computing systems can be both private and public. Large organizations often prefer to have their own system where all the information is stored and managed. Public platforms like Google Cloud and Amazon Web Services offer database storage services as well as app development tools. Customer-facing web applications, video games, special media companies, and online streaming platforms like Netflix and YouTube use cloud computing platforms. In terms of safety and data protection, cloud computing platforms are one of the preferred choices among new age enterprises. Public cloud computing platforms have scientists working for data protection and employ the best practices which small businesses can't afford. Experts say it's almost like a bank where you can store your money with other people's money, but the bank will make sure that the money is safe.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Strong demand for cloud computing services is said to be the reason behind TCS's 4% jump in profit in October-December period. That's all for today. For more news and analysis, please log on to business-standard.com. We'll be back tomorrow with the next episode. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.